Hey everyone, if you're listening to this, you're probably feeling the weight of student loans, especially if you're a millennial or Gen Z. It's a time of, a lot of stress and uncertainty. Don't forget to like and subscribe so you don't miss out on future episodes where we tackle important issues like this one. We've seen some crazy payment increases lately. People are talking about their monthly payments quadrupling, even increasing tenfold. It's a lot to handle. So let's break down what's happening with student loans, why it's so important, and what you can actually do about it. Okay, let's rewind and remember the SAV plan, the Saving on a Valuable Education Repayment Plan. The Biden administration created it to help make student loan repayment easier. But here's where things get tricky. A federal judge blocked the plan because states argued they would lose revenue if the plan went into effect. This decision could hold on applications for all income-driven repayment plans, not just SAVE. Now, this pause affects a lot of borrowers, even those already on plans like income contingent repayment, ICR, income-based repayment, IBR, or pay as you earn, PAYE. These plans usually require you to recertify your income every year so your payments can be adjusted, but with applications on hold, you can't recertify, and that can lead to some serious consequences. Your payments could bill up. You could risk defaulting on your loan, and even worse, unpaid interest could be added to your principal balance, making your debt even bigger. And if you were helping, the forbearance situation would offer some relief. Well, there's more. The forbearance for those who are supposed to be on the SAVE plan is coming to an end, meaning payments could restart as early as December 2025. So what can you do in this situation? Well, let's go over some options first. There's forbearance and deferment. These let you temporarily hit pause on your payments, which might sound great at first, but here's the catch. Interest keeps adding up during that time, so you're told to actually pros. Then there are non-income driven plans like graduated repayment or extended repayment. These give you longer to repay your loans, so your monthly payments are lower, but the downside, you could end up paying a lot more in interest over time, and these plans might not qualify for loan forgiveness programs. Another option you might be thinking about is refinancing your federal loans with a private lender. This could seem appealing, especially if they offer a lower interest rate, but there are risks. Private loans usually don't have the same protections as federal loans like income-driven repayment or forgiveness programs, plus their interest rates could end up being higher. Navigating all of this can feel overwhelming, and to top it off, getting help from the Department of Education is an easy way off, and potential government shutdowns have made it really difficult for borrowers to get the support they need. Now let's zoom out and look at the bigger picture for a minute. This whole student loan situation has sparked a lot of frustration and anger, especially among young people. Many were told that going to college was the key to a good future, but now they're facing a mountain of debt and a tough job market. It's a tough situation, no doubt. We're seeing more and more people questioning the value of a traditional four-year college degree and looking at other options. Skilled trades like becoming an electrician, plumber, or HVAC technician are gaining popularity. These jobs offer hands-on training, good pay, and often you can learn while you earn through apprenticeships. It's an appealing alternative for those who don't want to risk taking on huge student loans. And let's not forget about the potential impact on the economy if a lot of people end up defaulting on their student loans. It's a scenario that could have a ripple effect across many different areas. When borrowers can't pay back their loans, they have less money to spend, which can hurt businesses in industries that depend on consumer spending. This can then lead to a slowdown in economic growth. On top of that, widespread defaults can put a strain on the financial system as a whole. Lenders lose money, which can make them hesitant to give out loans in the future. This can make it harder for individuals and businesses to get the financing they need, further impacting the economy. The current situation is a prime example of just how challenging higher education financing can be. It highlights the need for more transparency and better support for borrowers. We need to keep talking about this issue and advocate for changes that make college more affordable and accessible for everyone. One person who's been speaking out about this is attorney Ashley Morgan. Her story is a powerful reminder of the struggles many borrowers are facing. Ashley was notified that her monthly student loan payments were going to more than quadruple an amount she simply couldn't afford. She's been vocal about her experience and is urging the government to step in and find solutions to the student loan crisis. Ashley's message is clear. Share your stories, contact your elected officials, and make your voices heard. It's a call to action that's resonating with many who are dealing with the burden of student loan debt. So what can you do to navigate this confusing student loan landscape? First things first, knowledge is power check your loan status. Make sure you understand the terms of your repayment plan and start saving as much as you can. It's also important to gather all the relevant documentation, things like your income verification loan statements and any correspondence with your loan servicer. This will be helpful if you need to contact the Department of Education or your loan provider. Remember, you're not alone. Millions of people are facing similar challenges. There are resources resources available to help you make informed decisions. Stay informed about any changes or updates to student loan policies. The Department of Education's website can be a good resource for information, though it may be hard to access sometimes. Keep an eye out for any announcements from your loan servicer, and consider connecting with advocacy groups that are working to protect borrowers' rights. And perhaps most importantly, don't be afraid to ask for help. Reach out to the Department of Education or congressional representative or your loan provider if you're struggling or have questions about your repayment option. This student loan situation is a real wake-up call about the complexity of funding higher education and the need for more support and transparency for borrowers. It's a conversation that needs to continue, and your voice matters. Share your experiences, join discussions about student loan reform, and support policies that make higher education more affordable and accessible. Now let's shift gears a bit and talk about how this situation is impacting career choices we've already touched on. The financial pressure student loans are putting on young people. This burden is causing many to rethink their career paths and consider alternatives to the traditional four-year college degree. In today's job market, things are constantly changing. It's crucial to explore all your options and find a path that fits your interests, skills, and financial goals. One path that's gaining traction is the skilled trade. These trades like electricians, plumbers, and HVAC technicians offer hands-on training, competitive salaries, and often have apprenticeships where you can earn while you learn. For a lot of young people, this is a much more appealing option compared to racking up massive student loan debt for a degree that might not even guarantee a good job. This shift in perspective reflects the changing landscape of the workforce. We need adaptable skills that meet the demands of a growing economy. This isn't about saying that higher education isn't important. It's about recognizing that there are many different paths to success. It's about empowering individuals to make informed choices that align with their personal and professional goals. Now, as we wrap up this part of our discussion, let's turn our attention to the potential consequences of widespread student loan defaults. Imagine a scenario where a large number of borrowers simply can't pay back their student loans. This isn't just a personal financial crisis, it's a potential threat to the entire economy. When borrowers default on their loans, consumer spending decreases because people are struggling to manage their finances. This in turn can negatively affect businesses and industries that rely on consumer demand. Furthermore, widespread defaults can strain the financial system. Lenders experience losses and might tighten lending standards, making it harder for individuals and businesses to access credit. It's a domino effect that can have far-reaching consequences impacting economic growth and stability. This is a sobering reminder of how interconnected our financial system is and how important it is to find comprehensive and sustainable solutions to the student loan crisis. As we continue this conversation in the final part of this episode, we'll explore some potential solutions and strategies from mitigating the risks associated with student loan debt. But before we move on, I want to emphasize the importance of staying informed and taking proactive steps to manage your financial well-being. Remember, knowledge is power, and taking control of your finances is essential for navigating the complexities of the modern economy. Okay, so we've explored the challenges and the potential fallout from this whole student loan situation. Now let's shift gears and talk about what can be done to fix this complex problem. There's no magic bullet, but there are strategies and policy changes that could really help ease the burden on borrowers and create a more sustainable system for financing higher education. One approach is to focus on making college more affordable and accessible in the first place. If college didn't cost so much, students wouldn't need to take on such massive loans. This could mean increasing funding for public colleges and universities, expanding financial aid programs based on need, and even exploring new and creative tuition models that are more affordable for students from all walks of life. Another crucial area is loan forgiveness programs. Expanding the existing programs and creating new ones could give much-needed relief to borrowers who are struggling to make their payments. This could include targeted forgiveness for those who choose public service careers like teachers, while those working in high-demand field. Could also meet a broader forgiveness programs that consider factors like income, family size, and the type of degree earned. Of course, we also need to tackle the issue of rising college costs. Head-on tuition and fees have been skyrocketing, increasing much faster than inflation. This makes it harder and harder for students and families to afford college. To address this, we need a multi-pronged approach. We need to find ways to control administrative costs, be more transparent about college pricing, and explore alternative ways of providing education that are more cost-effective. Beyond policy changes, there are things you can do as an individual to make a difference, as we've discussed. Staying informed about your loan options, managing your money responsibly, and reaching out for help when you need it are all essential steps in navigating this complex student loan system. Remember, this isn't just an issue for people who have student loans, it affects all of us. The burden of student loan debt can hold back economic growth, limit opportunities for individuals and families, and contribute to inequality. To solve this crisis, we need everyone to work together: policymakers, educational institutions, lenders, and borrowers alike. So as we wrap up this this episode, I'll leave you with this question to think about: how might this situation shape the future of higher education and career choices for younger generations? Will we see a move away from traditional four-year degrees and a rise in vocational and trade-based training? Will there be a renewed focus on making college more affordable and accessible? These are all questions that we need to consider carefully. Thanks for joining me for this look at the student loan shakeup. If you found this episode helpful, please hit that like button and subscribe to the channel for more deep dives into important topics. Until next time, stay curious, stay informed, and keep the conversation going.